Ed Seykota turned 5,000 into 15 million in just 12 years. Not much is known about his strategies, but I was able to find one of them. Here's how it performed over the past 6 years. We're going to go over how it performed over a range of futures instruments. Now, to give you some context, I'm backtesting Ed Seykota's support and resistance strategy from the Trading Tribe blog. Since it doesn't provide full criteria, I've made some assumptions, and totally when you do your own backtest, you can make different assumptions, so the backtest results could be slightly different, as there was never like full criteria listed. However, this is mainly just for some idea generation and to get you to maybe explore some of his old strategies or strategies using these sort of techniques. I've also tested it across multiple instruments and timeframes to identify which performed best. Now, obviously, this could lead to overfitting and not great live results, but I just wanted to see exactly how it performed over a range, so we can at least get an idea of like, okay, top best performance if we're thinking that's probably overfit is performed like this, and then here's the kind of other results as well. Trend logic. So we're going long and short-term resistance are calculated using highs and lows over X amount of bars. If the close is above the long-term resistance, then the trend is considered up. If the close is below the long-term support, the trend is considered down. And those trends are being built just over X amount of bars. So you could change that amount. So it could be 50 bars, 100 bars, whatever. Now for the actual entry logic, we're going long when the long-term trend is up. It places a buy order just above the short-term resistance level, and the short entry is when the long-term trend is down and it places a sell order just below the short-term support level. For exit logic, for long positions, we place a sell order just below the short-term support level, and for short positions, we place a buy order just above the short-term resistance level. If it's an intraday time frame, it'll also exit at session's close. That's just how I configured it in NinjaTrader, but you could let it swing if you wanted to for your own performance. For results, now commissions and slippage is included. The slippage does vary based on the futures instrument. So sometimes I've given it about 1 to 2 ticks. Sometimes I've given it 3 to 4 if it's a way more volatile and less liquid futures instrument. For the first example, we're going to be going over NQ, which is NASDAQ on the daily time frame. It does have a very low sample count, so I extended the range even back to 2010 to just get a bit more data and a bit more actual trades to see if the performance kind of held up. Still didn't get that many samples, but at least it was a bit better. So first, for the 2019 one, we performed okay. I think we got to about just above 80,000. I don't believe it was beating market, but obviously not every single strategy has to beat the S&P 500. It depends if you're putting in a portfolio of strategies that then ultimately beat the S&P 500, but you can change that out. Next is from 2011. So we can see, performance does increase, but we're still not getting that many more trades. Obviously, because it's on a daily time frame and there isn't that many samples, the volatility of the actual strategy is pretty erratic. And you can see huge jumps, and obviously maybe there could be a huge jump downwards as well. Like we dropped from around 115,000 all the way down to 60,000, give or take, and that was only in a couple of months basically. So yeah, because of the low sample count, your equity curve moves can be pretty erratic. And then here's the full, so we can see from the 2010 backtest, made $115,935. We went into a max drawdown of 60,000, which is pretty high. And we only had a total trades of 58. We had a win rate of about 48%, and you can see slippage is included here. Obviously, it's daily time frame, so it's not that much, and it was only using one contract, so realistically, you're probably not going to get much slippage at all. You can see mainly the average trade amount of profit wasn't actually too bad, 1,998. I guess it is a swing strategy, so that's obviously going to be pushed up quite a lot because you're holding them for a longer period of time, as the average time in market is about 54 days. But yeah, I think, to be honest, the best thing you could maybe do here is maybe tighter risk management techniques, potentially to improve the performance. And I will say a lot of the bad performance on this is on the short trades. You can see long, it did 162,000 for 35,000 of max drawdown. In short trades, it lost 56,000 or 57,000, give or take, and it had a max drawdown of 52,000. So potentially getting rid of the short side altogether could obviously increase performance. However, then you're a pretty correlated strategy of just going long only. So it doesn't really prove much better for the actual strategy as well, because you're also reducing the amount of samples or trades as well. So realistically, overall, at least on this first take, not a huge fan of the strategy currently. Next, I tested it over NinjaTrader's a full futures collection. They allow you to test over the most common kind of futures instruments on a daily time frame. So we can see here, NQ was the best performer. Then we had ZB, then we had crude oil, then we had ES, and then pretty much from there, performance got really bad, or it was just straight losing. And you can see also the combined results of all these are was definitely not very good. From 2010 to 2024, it lost about 24 grand and had a max drawdown of about 60,000. So definitely overall, I think I mentioned it in this post that I'm not very impressed with these results at all. Now we're actually going to try just before that the time frame of 60 minutes, see if it does any better intraday. So we can see this is where I had the original screenshot of the equity curve. It performed about, I think that's about 150,000 from 2018. We can see here the full results. So 148,900 for a max drawdown of 62,000, still very high max drawdown for that sort of return. Very low Sharpie rate, which is pretty expected because you have about 1,292 trades and you have very high max drawdown, which obviously means the amount of risk per return is going to be very low. Slippage is obviously applied here as well. And we can see the average trade is making around $115. That would be pretty much the only performance metric here that I'd say that is looking sort of good. Normally that means that if you apply more slippage or commissions, you're still going to be profitable on the average trade, which is good to see. But the amount of volatility you're getting for that return definitely isn't something that I would personally be wanting to do. You can see here short trades perform a bit better. So we have 53,000 and obviously the max drawdown is still crazy with 76,000. So we can still see here, at least for drawdown to return, long trades is definitely going to perform better. That is pretty consistent, obviously, though, with the NQ market and S&P, historically have just been on a bull run for a very long period of time. So most of the time, long-only strategies are going to perform better than short strategies, give or take. So overall, I think this kind of leads to the conclusion that the strategy does seem overall unimpressive, but potentially with some tweaks, potentially what I would be thinking about is having tighter risk management techniques, potentially getting rid of the short trades and trying to increase the amount of trades it's taking on the long side and see if I can beat S&P 500 on that side of things. And if I can, then that I could potentially add this into a portfolio of strategies. However, there you obviously run the risk of overfitting it, so you have to do your other tests like as I've shown here, Monte Carlo, reshuffle and resample. You'd want to do out of sample testing, walk forward optimization, and things like that. Now, give and take, I will say, now that you've seen these results, obviously, if you're using the exact same code as me, then you wouldn't be doing necessarily a full out of sample testing anymore because you've kind of seen how it performs. However, if you do your own iteration on this, then you can do your own out of sample testing and walk forward optimization and see how it performs. This was an original screenshot from the Trading Tribe blog of like how he envisions it to trade. Pretty much through NinjaTrader, I got this pretty much spot on, at least with the logic side of things. So I believe this is kind of how he wanted it to trade. I do believe it performed better, historically. And I would definitely agree with this person here that said that the drawdown in 22 would have left his stomach turning. I agree. I think the amount of volatility for this particular strategy just probably wouldn't be worth it for most people. Depends how you tweak it and see if you could, do some forward testing and see how it performs then. But it was still a very interesting strategy to investigate. I would always say my favorite quote by far recently has been "Curiosity is the best edge." And anytime I see a trader that has performed really well, or just even even if they're an unprofitable trader but they have a cool idea, I always normally try and backtest it, or at least put it on a list to backtest in the future, whether that be for my own personal strategies, or if I share it on Twitter like this, just give you your own inspiration and ideas to go on and build your own portfolio of strategies, or maybe tweak your own using these sort of techniques. I would definitely recommend checking out the Trading Tribe blog. They have some other sort of strategies, ideas on there. They're not the most systematic in my opinion. However, you could maybe get some inspiration from them and then tweak them however you want and do a backtest yourself. Now, if you need any help with backtesting or automating your own strategies, feel free to click the link below and you can work with me and my team where we can automate or backtest your strategies using code. I hope you enjoyed. Have a great rest of your day.